As you've probably heard in the news, pretty much everybody is talking about the possibility of a recession on the horizon. And in this video, I want to talk about some things we can do to recession-proof our portfolios if a recession does hit in the next year. And specifically, I'm going to show you my investing plans for 2020. And as you guys know, I'm not a financial advisor, so this is not personalized financial advice for your specific situation. This is just education and what I'm doing in my portfolio. And a couple of weeks ago, I wrote this blog post on Medium talking about how I'm investing going into 2020 and some of the lessons that I've learned from investing in Bitcoin since 2013. And a lot of questions popped up around this article, and most of them had to do with a recession. Like, what do we do if a recession hits, or is a recession coming? And look, I am by no means an expert in global macroeconomics, but I have been doing a lot of research, and I've been through 2 prior recessions, and I've learned a few things, and I feel pretty confident going into this next recession if one does hit over the next year or two. So we can start by just recapping the first part of this article to kind of set the stage and show you guys the mental model that I use when I approach investing. So one thing I like to do is I approach investing like a chess player, right? I like to ask a lot of questions and think deeply about these things. I ask questions like, what do I see that the mass majority of people might be ignoring? Or what are the future possible outcomes and what's most likely to occur? You know, I feel like on social media and in the news, you know, people get celebrated for trying to predict what's going to happen. And as I've talked about in prior videos, I think that's just a foolish way to approach the markets, right? We're dealing in terms of possibilities and probabilities, not absolute outcomes. And I also think about like what black swan events or unforeseen things could throw off any thesis or hypothesis that I might have developed, right? Or what do I believe that most people might disagree with me about? So as I've been thinking through a lot of these questions, one thing that came to mind was thinking about why so many people get hurt or lose money during recessions. And a common scenario that I see is people that have like a 401k or an IRA, or maybe they own some stocks or bonds, and maybe they don't even really fully understand what they own. Maybe they own some real estate or gold or crypto. But the problem happens is when a recession does hit, it's usually too late, right? Meaning prices have already fallen by 30, 40, 50%. And by the time your average investor realizes like, hey, we are in a deep recession, what ends up happening is they likely sell the bottom. So a good example